Good morning. It's Wednesday, January 29th. It's about 6 a.m. Central Time. So overnight, the precious metals, they are slightly higher after turnaround Tuesday unfolded as traders digested DeepSeek, the economic data, and the technical landscape across many markets. The largest technology stocks, they are extending their gains here this morning in the rebound ahead of a slew of earnings, while investors are really awaiting the Federal Reserve's interest rate decision. So taking a quick check on the NASDAQ here, up about 89 points as of this recording. So it's going to be a really busy day again, so we've really got to get after it here. So looking at the overnight price action in the precious metals and industrial metals, as well as your setup for the day. You do have gold futures about unchanged. The high of the overnight session was 27.75. The low was 27.63. If you are going to trade the futures contracts, be sure to look at those April contracts if you're looking forward here as far as establishing positions, as that will be the front month most likely starting here tomorrow or on Friday. Now gold today, it may trade up to another record or come close to it, especially if the Federal Reserve delivers a dovish pause at the 1 and 1:30 Central Time meeting. Remember, 1 p.m. is when you have the decision and 1:30 is the press conference. So gold's trading at about 27.70 last, and then it's about $30 shy of its all-time high. And this is going to be the central bank's first meeting here in 2025 and the first meeting with President Donald Trump in office. Now, policymakers are expected to hold rates steady, at 4.25% to 4.5%. Fed Chairman Jerome Powell is expected to give his press conference here, and he may offer clues to the outlook for the next meeting in March. So if you look at the CME's Fed Watch tool and the expectations for March, 25 basis point interest rate cut sits at the March meeting at about a 30% chance. There's a 69% chance that they leave rates unchanged. Now, we're going to have to continue to monitor the data, kind of the rhetoric coming out of the current administration and how aggressive they are towards the Federal Reserve. Remember, President Trump has been very critical of Jerome Powell in the past, and he also does want those interest rates down. So taking a quick look here at the silver market is up about 14 cents here. It did recapture $31 overnight, 31.05 being the high, 30.75.5 being the low. The gold silver ratio, sits at about 89 to 1. So we're still continuing to see these elevated levels despite that big surge upwards here in the silver market yesterday. About every 50 cents takes it down about a handle here at the moment. Now checking on the gold silver ratio, again 89 to 1, and looking at the industrial metals. You do have copper slightly higher. Copper has pulled back over the last few sessions. You do have aluminum futures up $20. There is a talk about the EU implementing tariffs on Russian aluminum, and I think that's why you got your turnaround here today in that market. And then yesterday we saw wheat futures up about 10 cents, and it was the leader of the agricultural market, as they are also extending that to agricultural products coming out of Russia and Belarus. You do have platinum futures up about $1 at 9.60, and palladium futures at about 9.65. So they're getting closer to that 1-to-1. About a week ago, it was a big disconnect between the two. We saw palladium futures rise significantly over platinum, and since then they've come back together. So shifting to some of the kind of the top overnight commodity headlines in the sectors that are leading, we are seeing the agricultural products up on that type of news. We are also seeing oil prices. They are falling back again, as well as natural gas. Natural gas broke below a critical level support. Many people were long natural gas, playing the polar vortex. The thing about products like agricultural products or natural gas, for instance, is that they're extremely cyclical in nature as far as the weather. So when you play natural gas and you're playing it in November, December, January, February, well, you're most likely playing those heating needs, polar vortex, things like that. When you start getting to March, unless you get this really late polar vortex, that February contract into March is not really going to move as much. And what we see is stockpiles start to replenish as you go into a season of just more normal weather per se when you get into the spring months, and they're able to rebuild those inventories back. That's why you don't really want to, in my opinion, hang on to those, because the landscape of what was at the root cause of you getting involved in the contract has faded away. So if you're playing on the agricultural side, like delayed plantings and dry conditions or too much rain, and then all of a sudden those developments are no longer there, and the crop is, you're monitoring crop progress going forward and things like that because it's already been planted. You've got to think about which contract you're going to be in and what the goals are surrounding that particular contract and the developments that impact that contract to cause prices to go up or down. So long-winded note there on natural gas in the agricultural market. But getting back to crude oil, prices are falling back. That protest in Libya, it seems to be where it was resolved. That's why futures were up about 90 cents to a buck here yesterday. And now people are really concerned about the tariffs on U.S. crude suppliers like Canada. And we are also expecting to see inventories increase about 2.8 million barrels, which could be the first gain in about 10 weeks. And that, oil prices has been quite volatile. It's impacted by the sanctions, cold weather, trade war concerns, poor economic data coming out of China. So those are all kind of the things you want to monitor if you're trading the crude oil market. I've opened up some bearish positions on crude oil with many clients because of the fact that I believe that President Trump will come and start tweeting about oil prices that are still too high. He'll be critical of OPEC, and I think that he can get oil prices back below the $70 region. Now, shifting to yields, the 10-year benchmark, the dollar and FX, the dollar did recapture some gains yesterday and is continuing to push higher. You do have some of the FX, like the UK, Australian dollar, the euro currency, all starting to sell off again and roll back over. Remember, they're kind of in this deflationary period. Their economy is doing quite weak. They're in a cutting cycle. They have none of the conditions that the U.S. has economically right now, and that's why I believe that the dollar index will continue to outperform. We've got 10-year treasury yields flat at about 4.5%. We do have slightly higher here on the 30-year, and then also the 10-year yield as far as the underlying futures contract is concerned. Now you look at coffee, it's been one of the best performing commodities here, and it's really because of the trade war risks. We're seeing these global supplies. There's concerns about them. The stockpiles of coffee beans have fallen to their lowest level since December. It is one of your best performing commodities out there. So just taking like a look at the data check, it's going to be cocoa, lumber, live cattle, coffee. Live cattle is a market that has been just parabolic for about 5 straight years now. One of your worst performing commodities is natural gas and also the volatility index at the moment because of the fact that you had that recovery in U.S. equities. So the S&P 500 back at about 6,100. Microsoft and OpenAI, they are investigating whether a group linked to the Chinese AI startup DeepSeek had obtained data from OpenAI's technology without authorization. Then they used that data in order to create this DeepSeek type product, violating OpenAI's terms of service. So they've sparked some concerns there of potential theft, and I think that's why you're starting to see the U.S. equity markets really come back here, back to the upside. Now, getting into the metals and the way that I will approach the metals here today, I'm going to monitor some of those critical levels. A lot of them are very similar to yesterday, 31.82 being that resistance point on silver where you want to see another breakout to the upside. There's quite a bit of complacency around this 50-day moving average in the $31 level at the moment, and your critical level support rising from 29.98 on up to about 30.09. You really don't want to see prices close below that level there where we've come touch down at about 30.04 and then scoop back up, because if we get that break below it, chances are we'll retest that double bottom on December 19th and December 31st around 29.25. On the gold futures, just quoting still on February 26.90, that critical level support. So it's coming up about $20. That's that 50-day moving average. And then you really want to see prices get back above 27.80 in order to spark that run up to about that 2,800 level and threaten the all-time highs. You get the all-time highs, it's going to be back on CNBC. I'll probably be back called on there. Again, I'll be discussing the gold market, and of course, they're chasing performance here and chasing those assets. So FOMC meeting here at 2, and then 2:30 is that press conference. What are we going to get out of Powell is kind of what I'm looking for. Remember last month, and you really want to have good memories on some of these things, because when gold got slammed and the U.S. equity markets got absolutely rocked last go around was that last central bank meeting where he came out with the hawkish pause. Does he come out with another hawkish pause? Does he bend the knee to Trump with a dovish pause? So we're going to have to see here as far as what his tone and what he's trying to deliver here and kind of its impact on the markets. Now, the markets will most likely be extremely volatile again. So for me as a trader and working with clients, as far as position sizing, oftentimes I take down the position sizing into those highly volatile moves. I kind of wait it out and I sit here literally with my popcorn watching things unfold, and then I'll come back into the markets and digest them into the evening, because a lot of times that break between 4 and 5 p.m. when the markets are closed, the reopening in Asia and then the opening in the Europe, you'll see how those particular types of traders are digesting what type of message was Jerome Powell going to deliver. So that's kind of how I play it here. If you got any questions, if you'd like to open up an account, many people are opening up accounts with us on a daily basis. Send an email to info@bluelionfutures.com. We'll send you over the account opening link. Takes about 10 minutes to get started here. We set you up on a platform. Our research here, you could reach out to any one of my partners here. We got Oliver covering the ags and the livestock. We got Bill on the U.S. equities. We've got Dan White, head of global research on the energy products. I write on the precious metals and a lot of the global macro markets here. So we've got you covered in all senses here, where a lot of these deep discount, there's no customer service. They're not going to give you anything. There's no research there. If the platform goes down, you got no one to call. So think about all that if you're trading in these markets here. So give us a call, 312-858-7303. Remember, futures and option trading, it does involve risk of loss. It may not be suitable to all investors. Good luck, good trading.